Welcome to the Riskwiser Zone, the podcast where we dive into the latest developments in the world of finance and stock markets. I'm your host, Louie, and I'm excited to share today's top stories with you. We have a packed show for you today, with news from around the globe that's shaping the financial landscape. From rare earth minerals to nuclear power, we'll be exploring the intricacies of these complex topics and what they mean for investors. First up, let's take a look at a story out of Australia, where Treasurer Jim Chalmers has taken the unusual step of suing a foreign investor in a rare earths mining company. The case centers around Indian Ocean International Shipping and Service Company Limited, which was ordered to sell its stake in Northern Minerals Limited over a year ago due to concerns about national security. Despite the order, the company has failed to comply, prompting Chalmers to take legal action. This move highlights the increasing scrutiny of foreign investment in critical minerals and metals, particularly those with strategic importance for defense and energy transition. As countries like Australia and the US seek to reduce their reliance on Chinese supplies, we can expect to see more stories like this emerge. In other news, Palantir, a well-known data analytics company, has announced a $100 million deal with a startup focused on nuclear power. The partnership aims to streamline the construction process for new nuclear reactors, which could have significant implications for the energy sector. With the U.S. government setting ambitious targets for nuclear power generation, this development is certainly worth keeping an eye on. These stories represent just a few of the many complex and interconnected threads that make up the world of finance. As we navigate these topics, we'll be seeking out expert insights and analysis to help you make sense of it all. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of finance and risk management. In this segment, we'll be exploring two interesting stories that caught our attention. Firstly, let's talk about the recent developments in the Indian stock market. The NSE Nifty rose 304.25 points or 1.2% to close at 25,549, while the BSE Sensex rose 1,000.36 points or 1.2% to end the day at 83,755.87. This marks the highest closing levels of both indices since last October. The rally was led by bank stocks, with the Bank Nifty Index ending at record levels. This uptrend is largely attributed to easing tensions in West Asia, which has revived investor sentiment and triggered liquidation of bearish bets amid expiry of June derivative contract. On the other hand, we also have a story about life insurance companies seeking to invest in the stock market. Life insurers are looking to diversify their investments and are exploring opportunities in the equity market. This move is expected to provide a boost to the stock market, as life insurers have a significant amount of funds to invest. However, it's essential to note that this investment strategy also comes with its own set of risks, and life insurers will need to carefully navigate the markets to ensure they're making informed investment decisions. It's interesting to see how these two stories are interconnected. The growth in the stock market can provide opportunities for life insurers to invest and grow their assets, but it also highlights the importance of risk management and careful investment strategies. As we always say on the Riskwiser Zone, it's crucial to be aware of the potential risks and take steps to mitigate them. That's all for this segment. We'll continue to monitor these developments and provide you with updates and insights. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. As we wrap up another exciting episode, I'd like to dive into a story that's been making waves in the world of politics. It appears that the city that never sleeps is about to get a whole lot more interesting. The recent Democratic primary for New York City mayor has left many scratching their heads, and Wall Street investors are taking notice. For those who may have missed it, progressive candidate Zohran Mamdani took the top spot, leaving former Governor Andrew Cuomo in the dust. But what's even more intriguing is that incumbent Mayor Eric Adams has decided to launch his re-election bid as an independent. This move comes after his popularity took a hit, following corruption charges and a subsequent decision by the Justice Department to drop the case. Now, I know some of our listeners might be thinking, what does this mean for my investments? Well, let me tell you, the business community is already sounding the alarm bells. Billionaire hedge fund manager Bill Ackman has come out strongly against Mamdani's democratic socialist policies, saying that New York City under his leadership would become much more dangerous and economically unviable. Ouch! But, as we always say here on the Riskwiser Zone, it's essential to separate fact from fiction. While some may see Mamdani's win as a wake-up call for the Democratic establishment, others are cheering his campaign's focus on economic issues. As an independent, Mayor Adams will likely face an uphill battle in the general election. And with Andrew Cuomo reportedly considering dropping out of the race, it's anyone's game at this point. The Republican candidate, Curtis Sliwa, and independent candidate Jim Walden are also vying for a spot in the mayor's office. So, what does this mean for investors? Well, as always, we recommend keeping a close eye on the situation and being prepared for any eventuality. A change in leadership can bring about new economic policies which may impact your investments. But it's essential to remain calm and not make any rash decisions based on speculation. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.